Elections have consequences, or so the mantra goes. So what will the results of November mean for you and your portfolio, and what steps should you be taking right now to get ahead? Welcome back to another episode of the Circle One three-part special on the U.S. elections. I'm your host, Jon Gordon from the UBS Chief Investment Office in Hong Kong, and we're very pleased to have with us Solita Marcelli from the UBS Americas office, who's been working through the scenarios and the implications to directly understand this.
Thanks, John. Good to see you too.
All right, so let me start with, where our U.S. election probabilities stack up right now, and what might move the needle for either candidate or party down ballot in these last remaining weeks.
Well, John, this race is incredibly close. We've just updated our probabilities to a 50-50 toss-up, as recent polls indicate that former President Trump has gained momentum in key battleground states. Now, previously, we gave Vice President Harris a slight edge. Now, if the polls are accurate, we might be waiting for days or even weeks for a final outcome. However, that's a big if, given polling inaccuracies when Trump is on the ballot. Now, Congress is also crucial. If Harris wins, we still expect a divided government, as Republicans have a strong chance of reclaiming the Senate. And if Trump wins, a Republican sweep seems more likely, although not definite. As for, what could influence the outcome in the final weeks, John, voting has already started. Many states are seeing early voting and mail-in ballots. So at this stage, there's less time to sway opinions. More importantly, getting people registered and ensuring high turnout could be the deciding factor.
So I have to say the U.S. economy's shown more resilience than many, including the Fed, had expected. How is that impacting the race dynamics and the rhetoric?
Well, usually, the economy is the top concern for U.S. voters, but this time it's more complex. There's a disconnect between the headline data and how people actually feel about the economy. Now, on one hand, inflation has decreased, GDP growth is steady, consumer spending is strong, and as you know, the stock market is thriving. However, much of this resilience is driven by wealthier households. Many Americans are facing higher living costs, increased credit card debt, and a cooler job market compared to a few years ago. So Vice President Harris might highlight that inflation has come down and we've avoided a recession. Former President Trump might say you're paying 30% more for groceries. And both perspectives are valid. Now, this complexity is reflected in surveys like our UBS Investor Watch survey, which shows a split in opinions on which candidate is better equipped to handle the economy. As a result, it's uncertain if the economy will decisively sway voters in one direction this time around.
All right, let me jump in. So if, as an investor, I do have more conviction in a particular candidate winning or a party doing well, with so little time left, should I be looking to take big directional positions? And what's your sense of what's already priced in, given the tight race dynamics?
Well, John, we don't believe that is the right approach. And I would say there are three reasons why. First, the race is too close to base investment decisions on an expected outcome, which means there's a high risk of being wrong. The tight race is also why we don't see one outcome being overwhelmingly priced into markets currently. Second, even if you correctly predict the winner, it's hard to know what the policy environment will look like. Some areas depend on Congress, and even with a unified government, narrow majorities will limit legislative ambitions. And third, other factors typically drive market performance more than election outcomes. The economy and earnings remain the main drivers. Now, that all said, there are still actions to consider. Certain sectors that are sensitive to the election may experience volatility. And so I think it makes sense to manage exposure both ways rather than going all in or all out. If you're concerned about a particular candidate, having some hedges like gold is also always a good idea.
All right, so say Trump does win a second term. What are the key sectors or assets that would benefit, sort of a Trump basket, if you were? And would big tax cuts be unlikely outside of a red sweep outcome?
When we consider the potential market impact of a second Trump presidency, the main focus is on the balance between looser regulations and higher tariffs. We could possibly see some tax cuts as well, but nothing substantial enough to be particularly stimulative, even in the case of a red sweep, given the challenging US fiscal situation. And in any other scenario, significant tax changes are highly unlikely. Now, in terms of sectors that would benefit from a Trump win, one would be financials, which would likely see reduced regulation, lower capital requirements, and possibly more mergers and acquisition. Energy, particularly fossil fuels, would also likely see lower regulatory risks and possibly more consolidation, along with an increase in natural gas exports. Now, there are also potential impacts beyond the United States, both positive and negative. For instance, in Asia, tariffs would likely be a major factor. China's consumer electronics sector could take a hit, as about 20 to 30% of production is destined for the United States. On the other hand, countries like India and key Southeast Asian economies, such as Indonesia and Malaysia, could benefit in the long term if the trend towards supply chain diversification continues to accelerate.
On the other hand, which sectors do you think would benefit most from a potential Harris victory, and what is the likelihood that Harris wins, but with a divided government?
Well, we view a Vice President Harris win as a status quo for broad equity markets, largely due to the likelihood of a divided Congress. However, there will be some specific impacts, right? We expect it to benefit certain companies globally in industrials, materials, and utilities, especially those related to renewables and energy efficiency, as concerns about rolling back the Inflation Reduction Act would fade. Now, outside of the United States, a Harris win could be more favorable for semiconductor-heavy markets like Taiwan and South Korea.
Finally, to close, I know you're very close to our U.S. client base. You're hearing from a lot of clients on their views into this very divided election. What insights can you draw from that?
From my conversations, it seems people are eager for the race to end, mainly because they're tired of the constant political ads on TV. Now, on the investment side, fewer U.S. clients are looking for election-related opportunities. Instead, they're more focused on managing risk, as many anticipate increased volatility, especially if the results are contested. As I mentioned earlier, it's wise to have some hedges, stay diversified, and remember that any spike in volatility is likely short-term. Now, looking beyond the election, the economic backdrop and earnings fundamentals appear supportive for financial markets, so we are advising our clients to stay invested.
Solita, great chatting. Thanks for making the time. Lots of great insights there.
Thanks, John. Always a pleasure.
And to our viewers, thanks for watching. I do suggest you find the time to watch the other episodes if you haven't already. A lot of great insights from our speakers. For clients who have specific questions on what's been discussed, you can, of course, reach out directly to your UBS representative. Stay tuned for more great content right here on Circle One.